Good morning. My name is Ron Morris. This is Moving Forward TV, your local real estate and mortgage update.
And I am Dylan Gaston. Thanks for joining us. Today's show, we wanted to talk about foreclosures, or really avoiding foreclosures, the options that you have.
Right.
There's a lot of people out there, and if you're a realtor, forward this on to the people that are sitting on the fence out there, wondering, should I go short sale? Should I, what should I do? Because we're in this situation. So what we wanted to do is we wanted to give them their options. There's not a lot of them, and we're going to go through them one at a time so that they can pretty much clearly know what their choices are.
Speaking of options, Fannie Mae has a great website called knowyouroptions.com. I think it's being flashed down there right now. And really, it's all about education, trying to explore what the options are out there and make an educated decision, what's best for you and your family out there.
Right. Okay, option number one is a refinance. There's a program out there called the Home Affordable Refinance Program.
Known as HARP.
Known as HARP. That gives some homeowners some options. There are some restrictions that come with the program, of course, as there are with anything, but it's definitely a viable option for people. The benefits of that include obviously lowering your payment and your interest rate sometimes. There's no negative impact on your credit score, and obviously the ability to stay in your home.
Okay, option number two is a repayment plan. This is for the borrower out there that have become behind or delinquent on their payment, and it's literally an agreement between the borrower and the lender to catch up that past due amount over an extended period of time. Now, the benefits include allowing you to catch up over an extended period of time. Number two, it's less damage on your credit, so you're avoiding foreclosure, so it's a lot less damaging as far as your credit's concerned. The third benefit, of course, allows you to stay in your home, thus avoiding the foreclosure.
Okay, number three is a forbearance. This is an agreement, an offer from your existing mortgage lender to reduce or even suspend your mortgage payments for a specified period of time.
Right.
And this is going to be a short time frame, just so that you can get back on your feet. Obviously, the benefits include staying in your home until you do, gives you the chance to get back on your feet, less damaging to your credit, and obviously, number three, avoiding the foreclosure.
Exactly. Okay, option number four is a loan modification. We hear about this probably a lot, probably more than even the short sales. A modification is just that. It's a modifying of your existing loan terms with your existing lender, changing the rate, the term, the payment, or a combination of all of that. Now, the benefit of that, of course, is it's reducing your monthly payment, allowing you to make it easier to stay in that home, a lot less damaging than a foreclosure on your credit report, and again, allowing you to stay in the home and avoiding that foreclosure.
Okay, option number five is the short sale. The other one that we hear a lot about, which is fine. This is a very, very, very good option if some of these other options are not working for you. This is when you sell your property for less than what you owe on it. Now, just bear in mind, if that is the case, you have to get a pre-approval from your existing lender. You can't just sell it. They have to approve it first.
And keep in mind, too, if there are two mortgage companies, a first and a second, which a lot of people do have, you have to have the agreement of both of those, not just one. Both mortgage companies have to be willing to help you with this.
Right. And obviously the benefits of this is you're not staying in your home, you're moving on, which is fine. You are eliminated, relieved from that mortgage debt in most cases. Also, it is less damaging than a foreclosure on your credit. And again, you can move on and kind of get on with your life.
Exactly. Okay, option number six is a deed in lieu of foreclosure. And this basically is just a transfer of ownership from the borrower to the mortgage company in exchange for a release of the obligation of that mortgage.
Now, sometimes under this program, they do what's called a deed for lease.
Which you and I have been in the business forever. I've
30
never heard
years,
that term.
and we have never heard that.
Until we read this on the Fannie Mae website.
Right. What that means is sometimes, and I doubt, I'm going to guess this is very, very temporary and very, very rare, but they will actually, once the deed in lieu of foreclosure happens and they transfer the property back to the bank, you can remain in the house and actually lease it back.
As a tenant, right.
Lease it back from the bank. I seriously doubt that's going to last very, very long, because obviously it's a loss to them. When they take it back, it's a loss, and they need to get that off their books. So,
and the only way to do that is to sell the property, so eventually you're going to have to get out. Now, the benefits of that are, number one, first and foremost, you're eliminating that mortgage debt from you personally, so that's a real biggie.
Right.
Number two, it's not quite as damaging as a foreclosure, so your credit's going to recover a little bit quicker than if you went through the foreclosure process.
And sometimes they actually allow relocation assistance. Some lenders are giving relocation assistance, financial assistance to you to help you kind of move on. Now bear in mind, with all of these options, they are going to take time. Nothing happens fast, and they are going to require work on your part. The lender, the mortgage company, they are going to require bank statements.
The homeowner, you're going to have to get your paperwork together.
Yes.
Bank statements, anything to do
Pay
financially.
stubs, financial statements,
Exactly.
things like
Tax
that.
returns.
They're going to want to see all of this information, whether they're doing a forbearance, a short sale, a modification, no matter what it is, they need to see where you are at from a financial standpoint. Almost like when you applied for your mortgage, they need to kind of see the same
Very
thing.
similar.
So they know if they can grant this to you or not.
And you're going to need to do some type of letter indicating why
Your
you,
hardship.
the hardship letter
Right.
saying thank you, indicating why, was it a job loss,
Exactly.
whatever the situation was, explain it to the lender why you're applying for whatever option that we've been talking about.
And remember, the negotiating for staying in your home and such like that, that's really something for you to do with an attorney. If it's a short sale where you are going to be moving out, short sales have to be negotiated by an attorney as well. Your realtor can do them, your attorney,
realtor,
mostly an attorney
right.
should do them, but your realtor can certainly guide you on that. Ron and I can guide you on that. Don't deal with something like that on your own. Definitely seek professional help. Okay, now if the home does go either short sale or foreclosure, the number one question that we get all the time is,
how long before I can apply for a new mortgage?
yes.
Now the short answer is, on a foreclosure, Fannie Mae, you're going to be required to wait 7 years after the short sale or foreclosure, I'm sorry.
After foreclosure.
On FHA, you're going to wait 3 years. Now, let's carry that over with, again, with a short sale on Fannie Mae, it's 2 years. On an FHA, it's 3 years, unless
The good news.
FHA, if you happen to be current at the time of short sale
Right.
and have been current for the last 12 months prior to the short sale, there's actually no waiting time whatsoever. A lot of people probably don't know that. Keep that in mind. I'm sure that applies to some of our audience out there. No wait.
Great option.
If you're current on that FHA, for an FHA mortgage.
Let's buy you a house.
Now, we know that's a lot to digest. If you have any questions about any of the options that Delyn and I have talked about, call us. That's what we're here for.
Right.
You can email us, you can call us, so you can further explore some options out there. I know we've both seen, and I'm sure a lot of you have as well, a lot of loan modification companies out there. I just warn you, you want to deal with a professional.
Yes.
Hopefully it's somebody your realtor has referred you to, or call us. We can guide you or help you in that area.
Absolutely.
In reference to
That's what we're
that,
here for.
McFarland Gould, part of our team, they are short sale specialists as well. Great bunch of people over there that can assist you and answer some questions in a lot more depth than what Delyn and I have talked about today.
Again, forward this show on to anyone that is sitting on the fence, not sure what they should do. Facebook, LinkedIn, Twitter, all of those things. We're out on the social networking as well. Here is to smooth sailing closings going forward. We are today and every day.
Moving forward, we'll see everybody next week.
Thanks. Bye-bye.
Wow, that guy really knows how to sell it.
Yeah, well, tell him to save the receipt. I want my money back.